Welcome back, everybody. The crypto market and stocks are in free fall right now. We're going to talk about why that is and how long it could last, and then maybe try to pinpoint a potential bottom to the market. We're going to kick things off by hearing from Fed Chair Jerome Powell, and it's two very, very short, quick clips that basically caused this entire erasement of billions of dollars in the market. So listen very, very closely, and then we'll dive into some charts around Bitcoin and analyze what he's saying and how that will impact price. So here is Fed Chair Jerome Powell.
Restoring price stability will take some time and requires using our tools forcefully to bring demand and supply into better balance. Reducing inflation is likely to require a sustained period of below-trend growth. Moreover, there will very likely be some softening of labor market conditions. While higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses. These are the unfortunate costs of reducing inflation. But a failure to restore price stability would mean far greater pain. Inflation is running well above 2%, and high inflation has continued to spread through the economy. While the lower inflation readings for July are certainly welcome, a single month's improvement falls far short of what the committee will need to see before we are confident that inflation is moving down. So, we are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%.
So there were a lot of really important things about what he just said and why it led to a serious bleeding of basically all markets across the world. And so we're going to break down a couple of these key points just to make it a little bit easier. So basically what we saw in that clip was Jerome Powell is saying there will be below trend growth for the U.S. economy, and that will continue. The labor market will soften, which means that we're going to see more layoffs, higher unemployment. Obviously not great for the growth of the economy. And because of that, more pain is to come for the average American. And that's what he's saying when more pain is to come for folks who have a hard time fighting inflation. Now, he's also not confident that inflation has peaked. Remember, that was a big talking point when that CPI number came in and it had lowered, right, from month to month. Now, he's saying that his team is not confident that it's peaked, which totally flips the narrative that most investors had in their head of thinking that it had peaked. And one of the biggest points is that he said restrictive monetary policy will continue. What that means is that the Fed will continue to raise rates. He really said it depends on whether or not they go for a higher accelerated pace or maintain the pace that they've raised rates. But what that means is more expensive money, harder to accumulate good debt, and very, very hard to have an economy grow when there's restrictive monetary policy. So those are kind of the important points and why it caused the market to crash. Now, if we go into some of the next important things coming up here, on September 21st, the Fed and Jerome Powell have their big meeting where they decide how much they're going to raise interest rates by. So on September 21st, you are going to see a reaction by the markets based on how much they raise rates by. If it's above expectations, you're going to see the market continue to crash. If it's below, if it's below expectations, you'll see, some consolidation or maybe a little bit of an uptick. But if the outlook from that meeting is, hey, we're actually going to increasingly raise rates, we could also see some serious headwinds coming from that. Now, moving forward, we also have some concern around the housing market. And I'll get to why I'm covering this here in a second, but bear with me here. So basically what we're seeing is this increased supply month over month of houses. And essentially what we're seeing right now is a supply in the market which has not been seen other than inside points of major recessions. So here in 2008, we can see that we reached a supply relative to today, 10.9. And then back in the day, in the 80s and the 70s, we also had reached this point and had a major recession. So I do think that, based on how housing kind of tends to impact the wider market, the stock market, and therefore crypto, I think this is something that we all need to be aware of, as the housing market does look like it's pretty close to hitting a bubble pop. Now, why I'm covering this is because Bitcoin, as much as we love to talk about it as an inflation hedge, as separate from the crypto market and other markets, it really is intertwined with the stock market. So if we're looking here, this is NASDAQ Gold, the S&P 500 correlated with Bitcoin. Now, the S&P 500 is this blue line, and what you're going to notice is that more often than not, the S&P 500 and Bitcoin are 70 to 80% correlated with each other in terms of price action. So that's why I just covered the housing market, because the housing market tends to impact the stock market, and the stock market tends to impact Bitcoin. So if all of these are not having a successful time frame, it's very, very hard for Bitcoin to do well as well. And that's why it's so important to look at the wider market, and why what Fed Chair Powell said is so important, why we need to understand that. So again, it's really important to note that although we love to think of Bitcoin as being separate from these other markets, right now it really is not adopted enough to be separate from these wider market trends. So that's why we're focusing on the housing and S&P 500. Now, getting really, really quickly into some Bitcoin charts, I want to look at some logarithmic growth curves. So we've actually hit a really, really interesting point here. And just to explain this really, really quickly, in these logarithmic growth bands, the top section tends to be our utmost resistance, and the bottom section tends to be our lowest support in a given time frame. And then this oscillator, once it hits about 0, it tends to be a good time to buy. Now, what we've just seen in this kind of most recent crash here from 30 down to 18, 20K is we've actually fallen out of our logarithmic growth curve. So now we're actually below a 0 oscillator figure, and we're actually negative 0.4. Now, we've never been this negative in the history of Bitcoin on that oscillator metric. Last time at our most recent lowest point in March of 2020, if we really want to go back to a serious low, we had a negative 0.1 oscillator, where compared today, we have a negative 0.4 oscillator. And this tends to be a good time to buy Bitcoin, right? And now this is not financial advice. I'm just saying over historical growth trends, this has been a good time to buy Bitcoin. Does not mean it can't go lower, especially since a lot of the headwinds we're facing here in 2022 are extremely, extremely unique compared to what we've seen prior to Bitcoin and what Bitcoin has come up against. So just wanted to point that out, as we're in a really, really unique spot in terms of our logarithmic growth curves. Now, to complement that, I want to talk a little bit about a logarithmic regression curve. So here, what you're going to notice is right now we're in between this red band and these green and blue bands. And this most recent drop was right here. This most recent weekly candle was basically due to Fed Chair Powell coming out and saying what he did, and talking about those several reasons that we just discussed previously in the video. Now, what you're going to notice in the history of the Bitcoin weekly chart is that this blue and green line right here, this little band, this tends to be the area where Bitcoin settles before rising up again. So we see that back here, and that is in March of 2020. We see that here again in January of 19. We see that again in 2017, and again twice in 2017. So this is a pretty played out trend. Doesn't mean it's going to happen every single time, but when we're in a state between this red and blue band and we're in a downtrend, a lot of the times our bounce comes between the blue and green logarithmic regression models. So what we're looking for, if we continue to really start to feel more pain, if more inflation gets baked into the economy, if we do not turn around quick enough, what we're going to likely see is a potential play between 17K and 12K right here in this range. Now that, in my opinion, would be, if we were looking for an ultimate bottom to the cycle, I would say we're probably going to see 12.5. I don't know if we'll go that low, but that is definitely in the cards for a bottom for the Bitcoin cycle. Now, if we look at this yellow line, this is when that Fed meeting is. So there's going to be, in my opinion, somewhat of a consolidation period between this meeting, maybe drop a little bit lower, but the uncertainty level really spooks investors from an institutional perspective. So a lot of the times, a lot of this big money that moves these weekly candles how we need them, that'll be on the sidelines waiting and to see what Fed Powell says about the interest rate rising. So If I were to kind of make an educated guess, I would say we see something, between 10 and 15% consolidation here for the next month or so. And then once we see what happens with this Fed meeting, I say we, at least consolidate more or to the upside if it's below expectations on the rate hike. If it's above expectations on the rate hike, I would expect something between, a 19 and 17K dip to bring us down to this log regression line here at that blue segment, which is right around 17.3, 17.5. So really, a lot of the Bitcoin price is going to hinge on September 21st. Remember that date, write it down. It could offer a really good investment opportunity if we see Bitcoin capitulate further. If not, we could see some, saving grace on the consolidation front. But that's what I'm seeing right now. Just to quickly recap, I think our absolute low, would be between 15K and 12.5. I think more realistically, we'll see something around 17K in terms of a bottom. If we get a bad meeting here and we actually have higher interest rate hike than we expected, it's always key to remember you cannot fight the Federal Reserve. The Federal Reserve will dictate how the market acts. There is nothing outside of the Federal Reserve that is going to impact the market more than the Federal Reserve itself. So if you're trying to go against what the Federal Reserve is going to do, you're going to get burned. Just remember that. Thank you so much for watching, and we'll see you in the next video. Bye-bye.